What's up, everyone? Welcome back to another weekly market breakdown. It's been a great week on the charts, and things are definitely shaping up to be a great one. So, before we jump into the charts, I want to take a second just to talk about the bigger macro picture, because right now the market isn't just moving off technical levels, it's moving off news, macro data, and geopolitical risk. So, one of the biggest things sitting over the market at the moment is still the interest rates and inflation expectations, especially out of the US. You know, the Federal Reserve is still the central bank that moves global markets the most. So whenever expectations shift around whether they're going to cut rates or keep them higher for a longer, you immediately see the impact things like gold, the dollar, and major indices, which we've seen in the past few weeks being impacted. Recently, we've seen a lot of focus on bond yields, and this is something traders sometimes overlook. When treasury yields start moving higher, it tends to strengthen the dollar and put pressure on assets like gold and tech stocks. But yeah, when the tech stocks, when the yields start dropping, you often see the opposite equities catch a bit of a bid, and gold tends to move higher as well. So that being said, the relationship between the yields, the dollar, and risk assets is definitely something traders need to keep an eye on this week. That's something that can assist you with your trading. Now, on top of that, we obviously also have a geopolitical situation, which has been adding another layer of uncertainty in the market. Whenever conflicts or war tension escalates, the market tends to react pretty quickly. You often see money moving into safe haven assets like gold and sometimes the US dollar as well. While risk assets can become a lot more volatile, for traders, the key thing to understand here is that geopolitical headlines can move the market. And it can be very quickly, and those moves often happen outside of the normal technical expectations. So, you might see sudden spikes, sharp reversals, or liquidity sweeps that are purely driven by news hitting the wires. This is why the market has been feeling a bit more headline driven recently, where a single piece of news can suddenly shift sentiment across multiple markets. And that, as traders, we've probably seen. Another thing we'll be watching closely this week is a major economic data releases. Any big inflation numbers, employment data, or central bank comments can bring in some serious volatility. These are typically the moments where you see the market expand quickly, take liquidity above or below the key levels, and then decide on a direction after that. So I would say that for traders, especially those on trading, those trading funded accounts with us, this is really where patience becomes important. A lot of traders get caught trying to predict the move before the data actually comes out, and that's often where people get trapped. So sometimes the smarter approach is to simply let the news hit, let the volatility play out, and then look for the cleaner setups after the news has been hit, and sort of ride the wave from there. Because at the end of the day, the goal here isn't to catch every single move that the market makes. The goal is to stay consistent, manage your risk properly, and take advantage of the high probability setups that are presented to you when the market gives them. In weeks like this, where you have macro data, interest rates, expectations, and geopolitical tensions all in play, the market can move fast, but it can also provide some of the best trading opportunities if you stay patient, stay disciplined, and follow your plan. That being said, we are now going to look at the charts. So let's go and look at the charts. So let's have a look at what's happening this week in terms of news. As we can see here on Wednesday, that would be the day that I am wary of this week. Every other day there's not heavy news events happening, but in terms of this week, I would say that this would be the day that I am watching out for. So we've got the core PPI, we've got the Canadian dollar. I'm not too stressed about Canadian dollar this week, mostly about USD. So we've got the FOMC minutes. That's a big one. We know that FOMC tends to move the markets quite a bit. That being said, Yeah, that would be one that I'm very worried for or watching out for. I will possibly go live for this and we can all watch the event together. Thursday, nothing really too big for the dollar on Thursday. There is quite a lot of news for GBP, for CHF and JPY. So it's going to be a heavy news for people trading things that don't relate to the dollar. But for me personally, I'm not looking at that. Friday is quite clear. There's not really much happening on Friday, but yeah, always watch out for any unexpected geopolitical things like something happening in the war. That being said, we know that Friday is pretty clear. This whole week is pretty clear. Wednesday would be a good day to trade. Thursday is also high impact news, but a good day to trade, a lot of volatility, and all in all, going to be a really, really good week going forward. So I would say that this week is going to shape up to a good one. Looking at the charts, let's look at the dollar first. So looking at the dollar, we know that the dollar has been quite bullish. That being said, the dollar is rising. We've sort of broke out of that range, which is very nice. And you can see that this could potentially be a liquidity grab, but with what's happening in the markets right now and what's happening in the world, I wouldn't say that it's a liquidity grab. I think that it's going to continue on its way. Yeah, all in all, dollar is quite bullish at the moment. Gold, we've been consolidating quite a bit. We haven't really broken out of this range. That being said, we could potentially see gold push to lower lows. Sort of create some structure as we break out. That is all dependent on what happens in the following week. We could still see the range, sort of see it consolidate a bit more and then push to the upside. It is all dependent on how the week goes and what's happening with the war. All in all, gold is looking good. And if the dollar is, continues to be bullish, I would say gold could also break up to the outside. But at the moment, we can see that gold is not something that investors are too keen on. Looking at NASDAQ, NASDAQ's also been consolidating quite a bit. It's sort of been in this range as well. That's because at the moment we're very risk off. This coming weeks, I think that NASDAQ could potentially drop as people pull out, in a risk off environment. GBP USD, very bearish, naturally so. If the dollar is bullish, this would be bearish. So yeah, we've sort of seen that GBP USD is dropping, and if the dollar continues to be bullish, we can expect that to also continue. GBP USD is following some nice structure, had a bit of a corrective pattern coming in here, but naturally so, we have now broken the lows and we can continue on our way down. But yeah, looking now at Euro USD. Euro USD is the same thing as GBP USD, with the dollar being bearish. With the dollar being bullish, Euro USD will be bearish as well. So naturally so, looking at US 30, US 30 has been quite bearish as well, following good structure. And yeah, I think that we could potentially see a continuation to the downside, especially with what's happening. Looking at US 30 still, we can now move on to crypto. Crypto has been very, very stagnant, hasn't moved much, which naturally so, investors, either those who got in really good positions are just holding, others are sort of taking their money and putting it into safer investments. Looking at Litecoin, it's all the same. All the cryptos at the moment look very, very similar to each other. Bitcoin also very stagnant, not really moving. We're ranging a bit. Like I say, it's expected in times like this. So yeah, crypto is looking very good. In terms of price wise, as they say, it's basically on sale. But yeah, the crypto side of things, very, very stagnant, not moving a lot. Obviously, for the day traders, there's still enough movement in there for anyone to catch positions. But all in all, this week, what I would be watching out for is my eyes are on gold, on the dollar, and then this year, the oil. Because as we know, there's been tankers that have been, gunned down. We've also seen that Iran is still closing off those channels, so oil cannot be moved out of those channels, meaning that the supply of oil is going down, the price will go up. So this week is going to be very interesting for oil. I will say that this week I'm going to be watching oil, gold, and most importantly, the dollar. Because if I know what's happening with the dollar, then we know what everything else follows. But yeah, my tips for the week would be watch out for gold, watch out for the dollar, and just keep your eyes on the headlines and what's happening out there in the world. All in all, this week's going to be a good one. Hope you all trade safe, follow your plan, and I'll see you in the next one. Cheers.